All right, what up, everybody? This is Jeremy from Escape Velocity Trading, coming at you for another market bias update report for the trading week ahead on Sunday, August 18th today. So, recap from last week, ended up losing about 750, made a significant gain on silver, ended up breaking even on copper trade here, getting wicked out on the previous candle on Friday, and then gave back a little bit of the gains on crude light there, doing a day trade within this big red candle here. So anyways, moving out to the week ahead, let's dive into the markets, looking where we are on the S&P 500 to start out and looking where we think we're going to go. So first and foremost, just taking a quick peek at the chart, our RSI is just starting to cross into bullish territory here. Our MACD is rolled over and is starting to come back into bullish territory, but we are sitting right at a really important resistance zone at 5,594. And you can see this has been a major resistance level in previous months. And over the last basically 3 weeks of price data, we have basically gone absolutely nowhere. It is too early to tell right now if this is kind of a dead cat bounce, and we can put this out to a weekly chart to see, but it doesn't look like it to me. We did have strong volume come in on the wick low candle here. We had nice follow through. Basically, all of last week's price movement was due to the economic data coming out, really solidifying that the price movement to the downside, the worries about the carry trade, the worries about inflation had been maybe a little bit overdone, at least in the short term. And now we are trying to figure out where to go from here. Looking at the chart, it looks very realistic to me to expect that we will probably pull back at least to the 50-period moving average, so coming back down to 5,500, and then the final breakout of the 5,600 zone from there. If we kind of do one of these little song and dances, come back up to test that breakout channel again, and then break through, that would be the bullish setup that I'd be looking for, but looking for support to hold first around 5,500. Going out to the Nasdaq. If we pop out to the Nasdaq, basically rinse and repeat the exact same thing, except that we are right at the 50-period moving average. Coming back down, we would probably come back down into the range of 19,200, somewhere right in there, and seeing some consolidation, hopefully there. If we start breaking down below some of these support levels again, this will invalidate the pattern. But if we do, again, kind of one of these things, come back up and retest that channel, that to me would look like an inverted head and shoulders and would look like we would likely be breaking out and moving to the upside. If again, we break that support level around 1900, or excuse me, 19,000 or 19,200 right in there, we could see a deeper retracement. And in that case, I'm no longer really interested in it. But we're looking for some kind of pattern development here, and that is going to be the inverse head and shoulders as we see it right now. Going out to the Russell. Russell didn't have quite as big of a blast off moving back up to the highs, but did have a significant movement as well. We are again at overhead resistance. You can see we kind of tested that zone back here, failed it, and then had a fairly significant sell-off. I'm not expecting that kind of movement today. We are actually seeing the MACD starting to curl higher. The RSI never quite reached our oversold levels, but is trying to recover slightly. Base case for this, going sideways for the next few days, probably sticking between the 20 SMA and the rising 50-period SMA. And again, looking for bullish movement off of that as we move a little bit closer to potential rate cuts. Going out to Dow Jones. Rinse and repeat, overhead resistance, this time by diagonal resistance, not the moving averages. All of our moving averages are underneath us, and they are actually all set up bullishly, which is different from the previous examples that we've had. So if we go back to the S&P, you can see our 9 and 20 are still below the 50, which isn't fantastic. The Nasdaq, same thing. The Russell 2000, same thing. And then if we come out to the Dow Jones, these are actually set up much more bullishly than any of the others, but we are again pushing quite a strong move off the lows. So again, hoping to see some kind of sideways action here and then a break above 41,000. If we go out to Bitcoin real quick, continuing to struggle a little bit, but holding our support at the 200-day moving average. Honestly, I would not be shocked to see a breakout of our diagonal here in the coming days and a move higher. Where that stops is anybody's guess, but we are down on the lower end of this choppy trading range that we have been in for a few months now. So if we can get back above about 60,000 and hold above 60,000, it would not surprise me to see us come back up to probably 65 or 67, somewhere in there. Might be a choppy journey, but that is kind of what I'm expecting on the Bitcoin front. Going out to crude light, had another sell-off, but ended up having a nice wick here. Coming in on Sunday, we are just kind of consolidating within that range of last week's Friday candle. And nothing really to see here other than day trading. It's too choppy and there's too much resistance overhead from all of our moving averages for a bullish trade, but we've already sold off enough that I'd be surprised if we see it go too much lower here. Going out to gold. Gold had a breakout here last week, closed on the highs, now just kind of consolidating at those highs. We can see on a longer time frame chart, if we toss this out to a 5-year, and we're going to need more price history out to a monthly chart here, you can see that we have just been on a tear ever since this all-time high breakout about 4 or 5 months ago. And we are still pushing higher. We are getting to the point where we are overbought on the RSI. Wouldn't be surprised to see it slow down here a little bit, but this has been pressured to the upside by the US dollar breaking down over the last few months. So interesting to see gold reaction to that. And honestly, you have to be bullish whether or not you do on short term. On the long term, have to be bullish on gold. Going out to silver. Silver cleaning itself up a little bit, has some work to do, still below the 50 SMA. My base case probably coming back down and retesting the 9 or 20 on the lower side, building some consolidation in here, and eventually a breakout above 29.35 would be playable to the upside, and that again would be an inverted head and shoulders if again we got that exact same pattern on silver as we were talking about on the major indexes for the S&P and the Nasdaq, lining up a really nice potential breakout trade here around 29.35. And if we do get that break, coming back up to 31 or 32 would kind of be the base case. So with that, let's poke out to our economic data. This week, nothing Monday and Tuesday. Wednesday, we have FOMC meeting minutes coming out. Thursday is our biggest day. We have our PMI data and unemployment claims. The unemployment claims is probably going to be the biggest one of this week, followed by the PMI data. And then on Friday, Federal Chair Powell will speak, and they have the Jackson Hole Symposium. Not expecting that to move the market much. I'm really going to be focused on Thursday for market moving action. So with that, guys, as always, trade safe. Let me know if you have any questions in the comments. Like and subscribe if this is helpful to you, and I will catch you next week.